So Jeff, here's the microphone.
Be a lady. Tuna.
Stand up, let's rock it.
Sitting down, please.
Get you up on the
Stand
table.
up, it's
Yeah, he's
up.
doing luck be a lady.
It's 2:45. For every contact you better people go, free bird.
Yeah, he's going to finish with Freeber. I don't know what key you're in, Jeff, but I think it's called the lost key.
I don't have a key.
God. All right. All right, well, we're going to go ahead and get started. Good morning and welcome to our first meeting of January 2023. And so we're excited to be here. We will do a statistics update next month when we've got some statistics, at least a month into the year. So we'll do a year over year on the stats, see exactly where we are. 2023 came in, though, about slightly over 7% appreciation, and that's down from 2021, which was 19.24%, and 2020, which was over 18%. So we've had a dramatic slowing of appreciation, and if you've been watching our month-over-month, 12-month trailing pricing by school district, you'll see that there are several school districts that are actually devaluing at this point. But good news, the spring market's upon us. There's a ton of activity out there. I don't know about anybody else, but I'd like to hear. I'm seeing just a boatload of activity, a lot more showings on my listings, my open houses. There was a bunch of traffic yesterday. If I'll give you a tip, if you're holding open houses, and please hold open houses, because as you recall, there's a huge advantage for client acquisition in open houses. We know they're in that 10-day window of emotional will to do this and go forward. If you're not using that buy down versus discount tool, you're missing an enormous opportunity. I picked up 2 new clients Sunday alone from using that tool. One of them was working with another broker. Young man came in with his parents and he said, I just can't believe this. This is incredible. And I was educating them on ask for a buy down, not a discount. And Lennar Homes I was able to get on a build with Lennar at McCord Point, $30,000 in points and buy down money. Which is going to reduce my client's payment by $359 a month, and it's the equivalent discount would have been over $70,000. And I used it right in our appointment with Lennar and ran those numbers. They also gave us $5,000 off the price. When I did I also used the builder spec offer sheet. That put their margin below 5%. A builder in a reasonable market is shooting for 18 to 20% gross margin before taxes. We called it EBIT, income before taxes. And it's incredible that they would accept a margin below 5% on a build. Because if there's any fluctuation in material costs, especially their lumber package, that's going to pretty much, it could possibly erode that margin in total. So the builders, once again, in spite of the new year, are desperate to move inventory and even just get transactions. We've got triple the opportunity in terms of units out there right now. We have literally triple the inventory that we did last year. And the REITs and the iBuyers, if they're doing anything, they're offering 20 to 30% below market value. So if you've got buyers below 300 that can't afford new construction, still there are plenty of opportunities out there that get back with your client base that are buying and let them know this. We can now get you a house. You don't have to compete on cash. And so that's a huge opportunity right now. Don't hesitate to educate the listing broker about a buy down versus a discount. that tool right now is just empowering. And I couldn't believe how positive the reactions I had in my open house with everybody I showed that tool to. Excuse me just a second here, get back up. Okay, our first presenter is Ryan McLaughlin from, I'm going to get the Schaff CPA Group. And Ryan's going to talk to us about how we can set up our businesses to really maximize our income, reduce our tax obligation, and so forth. I love hearing this information like everybody else because, you know, I like to keep more dollars and give them away. So, Ryan, here we go, and if you'll just click that to yourself.
Thank you.
All right.
All right, I do have a handout here. If you guys just want to take one,
Sure.
pass them around. Sorry about that. I don't know how many there of you are in here. It looks like there's more than I was expecting, so I may be a little short on the number. So I apologize for that. Just email me afterwards, and I can send you an electronic copy.
If you have extras when it gets down here, please push them back.
Yeah. So yes, I am Ryan McLaughlin with Schaff CPA Group. There's some familiar faces in here. My goal today is just to give you some brief overviews of taxes, how they work, and how you can save some money. If you have questions, please speak up, let me know. I'm here to help you guys, so if there's something you want to know or need clarification on, please feel free to ask. So first, taxes. You are taxed in all kinds of ways. Property taxes, income taxes. You pay tax when you go to the gas pump. You pay taxes on just about anything as you go through life. It's a very big part of your life. It is your biggest household expense. And it's a lot of times one you don't even see because maybe it just comes out of your paycheck, or you pay it in ways you just don't even notice. Sales tax, you pay it when you buy things online, buy things from the store, you don't even notice it most of the time. It takes until about April 16th of the year until you break even on taxes for the year. So what does that mean? It means every dollar you earn from January 1st till April 16th is essentially covering your tax liability for the year. Kind of hurts to think about. Then after that, you get to keep the rest. Typically, the average house in Indiana, at least, pays taxes of about 25%. Last year alone, the IRS spent about $12 billion trying to make sure that you're paying taxes and making sure that people are in compliance. You, the taxpayers, spent almost $100 billion employing people like me to do your taxes. So thank you. And the IRS estimates that about $270 billion a year is lost in labor just by trying to keep in compliance with taxes. So time that you guys are wasting trying to figure out how to be more tax efficient, making sure that you're doing the right things from a tax standpoint, is costing you money because then you're not making money yourself. The IRS tax code is 70,000 pages. I'm sure no one in here has read it, maybe not even read 100 pages of it. So it is very complex. There's a lot of things going on. It's important for you guys to have somebody you trust that can help you just make sure you're, one, staying in compliance and that you're not overpaying in your tax. You want to be the most tax efficient as possible. How many of you in here actually know what your tax rate is? Anybody? A few? It's not as simple as you would think. With the way the tax system is here in the US, it is, depending on what you make, each dollar you make is taxed at a different level. So you have what's called a marginal tax rate. That is just what your last dollar of income is taxed at. That's your highest tax rate. And then your effective tax rate is essentially your average tax. Most of you, I'm sure, do not know what your average tax rate is because that's not something that shows up on your return. It is something you have to look at each year to see what are you actually paying. So one thing that I know people are concerned about right now is the IRS just got $80 billion in this new tax reform. So what does that mean for you? Well, that's $80 billion over 10 years. So that's $8 billion a year that the IRS is going to increase their budget. $8 million a year, or $8 billion, $5 billion of that is going to structure improvements. So they're going to be improving their website, they're going to be improving the taxpayer experience, and trying to find ways to put people on the phone so when you actually call the IRS, maybe somebody will answer. The IRS expects about 53,000 employees to retire over the next 10 years, and they're expecting to hire 81,000 people. So it's not as scary as it thinks. They're really just replacing what they're losing and then adding a few people to make the process better, at least in theory. So the audit rates aren't going to change much. You guys are not going to, the IRS isn't going to come knocking at your door trying to look through everything you have. This is more of a right sizing what the IRS is supposed to be getting in order for them to do their job. The audit rates are here. I'm not going to go through them. Basically, the point of it is they're very low. How many of you in here are Schedule C filers? Meaning you're not an S Corp, you're not a partnership. A few. You guys are at a higher audit risk just because you're Schedule C. Doesn't mean you're going to be audited, but your chances are higher. Just by going to an S Corp or a partnership, your audit percentage drops about 10 times. So instead of a 2% audit chance, you're down to 0.2 or 0.3. Makes a big difference, and it helps protect you. As far as audits as well, the red flags, claiming your home office is not a red flag. We hear it all the time. Claim the home office. It's there for you to use. The IRS put this in the language so you can use that as a deduction. It's not going to give you a higher chance of being audited. The biggest things that do are if you misreport income. So that means you have a 1099 that says you made $120,000 of revenues, but you only put $110,000 on your return. That's going to spark at least a notice, if not an audit. Large Schedule C losses, so we're talking really big losses that offset all other income that you have on your Schedule C. If you have a hobby loss, basically you're just doing it for fun. You're not doing it to try and make money. How does the IRS determine that? They're going to try and do it in the way that benefits them. So you want to make sure that whatever you're doing, you're trying to show that you are a business. You have your own bank account for your business. You have your own name for your business, preferably an LLC, that the LLC has its own EIN. Everything is separated. You have your business accounts, assets, everything over here, personal, everything's over here. You try not to commingle those as much as you can. It just helps you in that argument that what you're doing is a business, not a hobby. Yes?
I've been writing off my drinking as a hobby. Is that an issue?
I mean, if you haven't been audited yet,
Yeah.
it may come.
It's gone through for 40 some odd days.
Yeah, it's that's something that eventually could catch up to you, but well, in more ways than one maybe. But from an audit standpoint, it's all audit risk. So you are putting more chance of you being audited just by doing something that's not correct. Doesn't mean that you're going to get caught. It just increases your chances of being caught. Mortgage interest, another one. Technically, if you have mortgage interest on a home, that the debt is higher than $750,000, you are not allowed to take the full interest deduction. It is very simple for the IRS to know. The statement on your mortgage interest says what the balance is at year end. So if that's over $750,000 and you take the full interest deduction on your return, they know something's off. Education credits, a lot of people who self-prepare their returns don't do these correctly, so the IRS knows to look there as well. So how long should you keep your documents? How long does the IRS have to come after you? Typically 3 years they can come after you for an audit. Once those 3 years are up, that return is not subject to audit unless you did something that is considered fraudulent, which then they can look at any tax return you've ever filed. Or if you've omitted at least 25% of your gross income, they can look back 6 years.
How long do you recommend to keep receipts?
I say 5 years. Unless you know you're doing something, then keep them for 7. If you know you're really pushing the envelope on something, keep them for 7. But I would say 5 is a good number.
Is shredding and burning both recommended?
Shredding is,
Burning the receipts.
I mean, after 5 years, sure, burn it all. So what should you keep? Keep everything. Anything that's related to the business, keep for at least those 5 years. If you're running it through the business, anything that runs through on your bank statement, your credit card statement, anything that you're trying to deduct, keep record of it somehow, some way. Keep that proof. One thing to think of as well, travel and meals require extra documentation. You can't just keep a Southwest Airlines receipt and say, oh, this was travel, and the IRS is going to go, oh, good, you can deduct that. You need to be able to prove why that travel is also business related. So what does that mean? It means you have to have what you paid, why you went there, how is that business related, and then the amount of time and what you did with that time as well. So you can keep an itinerary that you just put in a Word document and say, this is what I did each day of this trip. I had a seminar on these days. I met with a realtor for just a networking meeting on these days. Do something to prove that what you're doing is business. If you spend 4 hours and 1 minute of each day on business, that is considered a business day while you are traveling. Or you have a specific meeting set up, that is then also a business day. Mileage, this goes for meals too. You want to say why you are there, what the business purpose is. Don't just keep the meal receipts. Say who you met with and say you talked about taxes or insurance or networking or whatever the case may be. Mileage, again, no one does this. But what you should do is keep mileage of every trip you take for business, every trip you take for personal, and say what you did on each of those trips. Beginning, ending mileage, and purpose of the trip. So today I left the office, came here, I tracked my mileage. It was to have a presentation to you guys. I would somehow keep track of that. I use MileIQ. It's simple enough. It's probably the best one I've found out there. If there's a better one, please let me know. But keep track of it somehow. You need to have a log. If you were audited and you don't have a log, the IRS will immediately throw out your business mileage, even though obviously you're going to have some. There are certain expenses that you can use the approximation rule, the Cohen rule. All that means is the IRS knows that as real estate professionals, you guys have MIBOR fees and some sort of professional fees. If you don't have the receipts for those and you don't remember how much you paid for them, you can estimate charges like that because obviously you need it to run your business and to keep your license and to remain a real estate professional. Again, records, basis records you want to keep forever, and tax returns forever. Everything else that supports those tax returns, keep for 5 years. So basis records, what does that mean? You buy a rental property in 1980, do not get rid of anything related to that property until you sell it. Once you sell it, then keep it for 5 years, then you can get rid of it. You want to keep track of anything that is considered an asset. So how can you save taxes? Well, retirement plans are great. You get to put away money, take a tax deduction now, defer that tax until retirement, and then when you don't have other income, you realize that income and pay tax on it then. So there's all kinds of different retirement plans. What is best for you depends on your individual situation. Typically, a solo 401k is a really good vehicle, but again, it depends on your specific situation as to what is best for you. With all of you being real estate professionals, their solo 401ks also have some advantages for you. Well, it's for everybody, but you guys are probably the most likely to try and use it. You can have a solo 401k that has a custodial, a custodian running it, and you can put real estate into your 401k. So if you have a bunch of money stuck in a 401k and you want to try and use some of it now and get some of that tax benefit as well, you can have your 401k buy a rental property and you get the same tax treatment as though you were buying a stock of some company and investing it in the market. You get deferred tax on traditional. If you have a Roth 401k, you get tax-free growth on that asset. As far as the timing of your income and expenses, you always want to defer income and accelerate expenses. That's the goal of the game. Push it down the road. You can always figure out the tax later. If you can figure out the tax later, you usually have more options to try and minimize the tax in the future as opposed to now. In low income years, you want to recognize income, and in high income years, you want more expenses. The goal is to have a flat line through your entire life. That is the most effective or most efficient way for you to save tax. You pay the same amount of tax every single year for your whole life. Having big peaks and valleys because of the graduated system, if you get up to the top tax bracket in 1 year, it's 37% at the federal level. Lowest is 0%, but if you are stuck right there in the middle, you can pay 22% every single year for your entire life, saving lifetime tax. So how do you accelerate expenses? There's Section 179, bonus depreciation. I'm sure you guys have heard of this. It's a way to accelerate expenses all in 1 year for bigger expenses like asset purchases, including vehicles. How else can you save taxes? Well, you can cheat. I don't recommend it, but you can. There's the numbers are here. The tax gap is massive. The IRS is always trying to narrow that tax gap. What does that mean? It means that's how much they think the U.S. the taxpayers have underpaid their tax. 14% non-compliance rate. It's pretty high. The IRS is underfunded. We went over that a little bit. They've continually had their budget cut. Now they're getting some of that money back. Again, it's not going to massively change the audit percentage. It's just going to allow them to kind of pinpoint certain items. Right now, there's still, if anybody's called the IRS lately, if you've gotten through, good for you. They say they answer 37% of the calls. I do not believe them. We as tax preparers, tax professionals, have our own line, and we can't even get through on that line. So more tax savings. If you guys are W-2, you want to max out any pre-tax savings you can, most likely. So what does that mean? That means healthcare. If it's offered through work, you want to get it through work. If there's any kind of fringe benefits as like dependent care or HSA or anything like that, you want to do that as well. If there's 401k or retirement, defer. That's what you want to do. For those of you that are self-employed, there's a lot more opportunities for you to save tax because you are running your own business as a self-employed person. It doesn't matter if you are an S Corp, C Corp, or just a Schedule C and running as a sole proprietorship. You have The opportunity to, if you have children, you can hire your children. Your children have a lower tax rate than you do, most likely. So you want to pay them at the lower tax rate and then let you take the deduction at the higher tax rate. There's ways to do it that are the most beneficial, but that depends on your exact situation. You can buy life insurance, yep. If you do not take the deduction now, the life insurance money that's received upon your death is tax-free to whoever the beneficiary is. So if you get life insurance, do not take the deduction now. Yeah, go ahead.
So how old the child can be used for these purposes? Is there a limit for the child?
Sorry?
Is there a limit for the child?
There's not a limit, but typically I would say you don't want to pay your children more than $12,000. Why $12,000? The standard deduction for an individual is $12,000 on the federal return, so they would pay zero tax up to $12,000.
What the age?
The age,
Yes.
so depends, but typically 18 and under.
18 and under.
Yeah. If they're in college, there may be some opportunities to still have some tax savings up till they're 23 or graduated, but it gets a little more complicated then. Hmm?
Do you have to say that they're doing something specifically, or, and then we talk about that, you use it for like photography or something?
No, I don't.
Ideally, they should be doing something for your business. If you're self-employed, it's very easy to say what that is. I mean, if they do anything around the house, I mean, so the extreme example is my wife ran a boutique for a while, and our 6-month-old, we paid her to be a model for her store. She was putting the social media posts, all of those kind of things. So we paid her. Was she working truly? She didn't know what she was doing, obviously. She was 6 months old. But we were using her to help generate business. So you can get creative with it. What other things can you guys be looking at? There's 529 plans if you don't have one. If you have kids, especially if they're in college, you can contribute up to $7,500 a year into these 529s and get an immediate tax credit of 20% of what you contribute on your Indiana return. 20% return on your investment in year one, that's not something you hear about anywhere. I think it's a great investment. HSA, max fund that if you have the opportunity. It is tax-free. You get the deduction on when you contribute the money in. You get tax-free growth while it's in there, and when you pull it out, it is tax-free as long as you use it on medical expenses. It's the only triple threat when it comes to tax savings. One way to avoid taxes too, you could die. I don't recommend that one either, but that's one way to avoid taxes. Take the home office. So the home office is there for more than one reason. One, you get a deduction for $5 per square foot of the home office you have. You can also do the actual method, which takes what you actually spent on the home office, a little more complicated, but it's another option. But the main reason you want the home office to be on your return, the IRS considers your commute to be a personal commute. So you're going from your home to your work. If your home office is there at your house, your commute is from your bedroom to your home office. You're not having any mileage from there to there, I assume. Maybe you guys have a massive home. But the point is, then anytime you leave your house and do anything for business, it is business mileage the second you leave your garage, leave your driveway. Otherwise, you'd have to drive to your office or drive here and then go from here to somewhere else.
And I want to chime in here real quick because that is extremely important. I had an accountant that filed my taxes, got audited, the IRS, and he said I couldn't deduct from my house to my first appointment. It was a big settlement with the IRS when they told me I couldn't deduct about 10,000 miles. Had I had an accountant that would have said, nope, His office is in his house. Every morning he walks from his kitchen to his office, then he goes to work. Would have saved me a good amount of money.
Yeah.
So that alone is just one, because you're real estate focused.
Correct. You're
Isn't
right.
there a recapture tax? You have to share part of the.
Yeah, so if you do the actual method, you can depreciate a portion of your home prorated on, based off of square footage of the home office and your home. So you're taking some depreciation off of your house every year, and then when you go to sell it, you would have to recapture what you deducted in the past as income in the year of sale.
But the value of the mileage deduction.
That's where it really matters.
what
That's why
helps
you
me
want to
a
do it.
ton.
So I know I'm getting close on time here, so I'll get through these last, I'm going to skip to the ones that really matter to you guys. Real estate professionals. What it means to be a real estate professional. It doesn't just mean that you have your real estate license and I'm a real estate professional. I could go do the same thing, but the IRS is not going to call me a real estate professional. You have to have 750 hours worked actively in real estate. I'm sure that's easy for all of you. That's about 16 hours a week. It's not very much. But the catch is that 50% of your working hours have to be on real estate. That's where they exclude me. I work 2,000 hours a year in accounting. The IRS is not going to believe me if I say I work 2,200 hours as well working in real estate. So they're trying to eliminate people like me from being able to get these special advantages that real estate professionals have. So what is that? That means if you buy a rental, rentals are naturally called passive income, meaning you cannot take losses on them. If you are a real estate professional and you're active in you're active in real estate, it is now an active activity only for you. So that means if you take a loss on a rental, you can deduct it in that year. It doesn't carry forward to offset future income. You get to use it now. So you buy a rental this year, do a cost segregation on it, which just means you look at this property and say, this part is the structure, here's the land, but this is land improvements. This is furnitures and fixtures. This is some sort of building improvement that is not subject to land and structure rules, which allows you to deduct 100% of that in the first year you place it in service. Typically, you can deduct about 30% of a rental purchase in the year you put it into service just by doing this cost segregation. If you buy a $100,000 rental, you can take a $30,000 deduction in year one. Great way for you guys to offset income that you're making currently. Really, ideally, if you're in real estate, if you're following the blueprint, you want to buy one property every single year. Every year you're a real estate professional. And you're taking those deductions and you're just deferring taxes, deferring. You still have that equity in the rental, and whenever you sell that rental, you will have to pay tax on it. But you are taking those deductions now and offsetting when you have the income. So if I were to try to do the same thing, I buy a $100,000 rental, I place it in service this year, I get a $30,000 deduction, and then it flows through my return and it says you cannot take it. It offsets future income, so it sits there on my return as a passive loss carry forward for 20 years until I finally go to sell this rental and I finally made taxable income. Just because so for me, it does not benefit me in a way that it benefits you guys. And one thing to make sure too is that just because you have positive cash flow in a rental does not mean you have taxable income in that rental. Depreciation, you are taking depreciation on the property, so you are offsetting, it's a non-cash deduction on the property that you're allowed to take every single year to help offset some of the income that you're bringing in. And I think those are the biggest points I wanted to cover here. I know I'm a little over on my time, but Does anybody have any questions? Or if you're looking over the sheet, if you see something I didn't bring up and you have a question on?
So I didn't receive a
Yeah.
contact information, so.
Yeah, it's my name, Ryan, Ryan, at Schaaf CPA, so that's SCHAAF.com. Yeah.
Besides the less chance of getting audited if you have an S corp or LLC set up, what are the other advantages from like self-employment tax and
Yeah.
things like that?
Yes.
Why should you set up? Why should they have an S corp or LLC besides the less chance of?
Yeah, so first, you want to get that LLC. And if you don't have one, set one up today, get an EIN for it. That allows you to have the S corp option as of the second year in LLC anytime moving forward. So why else do you want to do it besides less audit risk? There's this tax called self-employment tax that if you are a Schedule C filer, you know all too well. Every year you go to file your taxes and you're paying a big amount on that return. So S corps are a way for you to elect that you are going to make your business a corporation, but you're electing to pay the tax for that corporation. So all of the income, all the expenses flow through the corporation onto your personal return and you pay the tax there. Well, that seems like the same thing, right? But the catch is, any income generated by the corporation is not subject to self-employment tax. When corporations get old, they do not pull from Medicare, they do not pull from Social Security. We do. So if you make, just for easy numbers, you make $100,000 a year, you are paying roughly $15,000 in self-employment tax as a Schedule C filer, a sole proprietorship. Just by moving to an S corp, you could then say all of the S corp is making all that $100,000 and you're saving $15,000 on taxes, at least in theory. The IRS knows that this is what you're trying to do, so they say if you're an owner of an S corp, you have to pay yourself a reasonable wage. What is a reasonable wage? Nobody knows. I don't know, you don't know. You'll get a different answer from every single person you talk to. No one will ever give you the same answer. So our theory is, yeah.
I will say this, John shared this with me. He said, don't worry about it. And I'm serious. And he said, unless you get to a certain level of money coming through that, the odds of them auditing what you paid yourself as a salary are very, very low.
They just don't want to see zero. That's
They don't want
correct.
to see zero, but like if it's $1,000, that's fine.
Yep. So yeah, so typically our theory is low but reasonable. So what does low but reasonable mean? Well, usually it's high enough to give you a paycheck each month that is going to cover your tax liability. So we put it all towards withholdings, federal and state. And then there's no net check that comes home to you. You still take distributions just like you would as a sole proprietorship, as a Schedule C filer. You just transfer that money from the business to your personal. You use it as you need. But you are then paying a low wage. So again, using that example, you have a $100,000 net profit. You say you pay yourself in wages $25,000. You're saving yourself roughly $4,000, or no, you're paying $3,000 or $4,000 in self-employment tax, but you are saving still $10,000 to $11,000 a year, every single year, and that is permanent tax savings. That's not deferred, that is permanent.
So if you're making $100,000, get it set up so that you save $7,000 or $8,000 extra.
Yeah.
What's it cost to set up?
Yeah, so the catch is it's more, you have to complicate your life and spend more money just to have an S corp. Why do you have to spend more money? Well, you have to run payroll all year. And you also have to file a separate return now. So what does it cost? There's no real answer to that. Payroll probably costs $1,000 a year or so just to run it. So, and then the accounting side of having another tax return filed, roughly $1,000 there with extra prep and everything that goes into it. Yeah.
Now, it does, though, reduce your ultimate Social Security benefit.
Yep, and that's the other risk.
Everybody, Can you explain that?
Yeah, so the risks or the cons, I guess, to going to an S corp are the cost of it, the complication.
Kyle shouldn't do it. Is that what you're saying? Don't do it, Kyle.
The IRS saw my photo the other day, and they gave me an early bonus for a death benefit.
Yeah, so the risks are, one, the IRS could tell you you're not paying yourself a reasonable wage, which that's just an argument you have with the IRS if that time ever comes. But as Jeff alluded to, as long as you're showing a wage, that's not who they're going after. So then the other is Social Security. So your Social Security benefits are based off your highest 30 years of earnings within your tax life. So post-college to whenever you retire, your highest 30 earning years, that's what determines your Social Security benefits. So if you're paying yourself a low but reasonable wage, it is going to reduce what you would get in Social Security benefits. The idea is that you're taking the money you're saving on taxes now and doing something with it that's not going to be an issue. But that is a risk factor.
How do you ultimately disperse the corporate funds?
So you have the wages. So if you have $100,000 profit and you have $25,000 of wage, you have remaining $75,000 real estate. Unless you start, rentals are going to be done separately, not in your S corp. So we're ignoring that. But you're not going to have assets really. You're not going to have a lot of debt outside of like a credit card. So your bank balance is what you can take from the business, and you can just take it as a distribution. It's tax free. You pay tax in an S corp on the money you earn in the year you earned it, not when you take the money out. Yeah.
Okay, I'm gonna feel this. So if I'm an accountant and he's trying to explain this to me and it doesn't sound nice to me. Okay, so I have an S corp and I have a distribution to myself. Okay? So then what I have left in my account at the end of the year. So isn't that taxed though? I mean, like what is in my S corp company?
Yes. So using that example, you have the $100,000, you pay yourself the wage. What's remaining? You have the $75,000. You can decide to do nothing with it and just leave it in the bank, let it sit there. That's fine. That's $75,000 sitting in your business checking account that you are paying tax on regardless. Or you can take it all 75 out and you end the year with zero in your bank account and you're still getting taxed on that $75,000 in the S corp.
Okay.
Does that?
So then if I take out the money of the next year, so say I leave my 75
Mhm.
in, okay, and so then I get taxed on it for that year. Then when I go to take it out, aren't I taxed within that year for distribution?
Not for the distribution. So the IRS created this thing called tax basis. It is something that everybody's accountant should be keeping track of. If you have an S corp, it tracks your history of revenue, expenses, distributions, everything that affects the business. And so if you leave that $75,000 in there, you will end the year with $75,000 of basis, which means you have paid tax on that $75,000. So then you can take it the next year without being taxed, even if you have zero income in the next year.
And that's when it toggles between my tax rate, because either I can take it and it hits my tax rate of my personal taxes, or it hits my tax rate of my company.
Well, if you're an S corp, it all flows through to your personal anyways.
Right.
So there is no corporate tax rate for an S corp.
But there's a lot of deductions.
There are a lot of deductions. You just got to.
$75,000 could disappear with deductions if you
Yep.
had a good account.
So one idea that we always throw out there is you guys have to buy a new vehicle.
Yeah.
Great. As a real estate professional, all of you are driving a lot of miles on the vehicle that you're personally using, right? Probably 15, 20,000 miles a year is what we see a lot. But say you have to buy a vehicle for your spouse. Well, they're not going to be as active in the business. What you could do is wait to buy the vehicle till end of the year, as long as the vehicle, SUV or truck, is 6,000 pounds GVW or higher. You can take a full year deduction based on the percentage of business use. So the goal would be you buy a car on December 31st. You leave the dealership, you go straight to Office Depot, you walk in, buy something. You're taking pictures of everything, the odometer, the Staples receipt, the car parked in the parking lot. You leave it there overnight. You come back on January 1st, pick it up, take it home. You can then do whatever you want with it for the rest of your of that vehicle life. But in the year of purchase, it was 100% business use. So you can take the full deduction of the cost of the vehicle in the year you bought it.
You're okay until you sell it, right? Once you sell
When
it.
you sell it, you would have to recapture the depreciation on it. So if you sell it for $20,000 10 years from now,
Just
you,
run it into the ground?
yep.
Last year, Jeff found a 1972 Ford Pinto for his wife.
It didn't weigh enough.
Built it with rocks, got it over 6,000 pounds, he got the deduction.
No.
What if you donate the car at the end of life?
Ooh.
So you would, if you donated at the end of the life, so you would get it appraised. Your basis in the vehicle is 0, so you would not get a deduction for the donation because you already took the full deduction
But you
on
wouldn't
it.
pay tax.
You wouldn't pay tax on it. You wouldn't have to pay tax on it, but you wouldn't get a deduction for it.
Thank God, because I think that was good.
Just let your kids drive it.
Yeah. And you could do the same thing with kids' vehicles too.
Keep it in the company name for forever, right?
Yeah, ideally you would put it in the business name. Obviously that creates issues with a commercial license and commercial insurance and all those things, but that would be ideal. All right.
Thank you, Ron.
Thank you.
Just some advice, if you want to pay less tax, call this gentleman,
Oh, yeah.
period.
Disclaimer, we are not taking clients for 2022.
Oh, well,
2023, give us a call.
In May.
Well, in May, yeah, once we get through tax season.
awesome, you bet.
Thank you.
Thanks, Ryan.
You get your personal email or whatever it is, you can get a copy for those.
Yeah, it's,
Yeah, you log in.
Oh, you dropped, well, yeah. I'm dark, it was 7.
How do we get back up?
You have the remote for the TV? Just turn the TV on. Sure. This thing is not like this.
Holy
This TV
shit.
is not like this. And this is age discrimination.
We're gonna have to get her back over here.
This
Yeah,
is age discrimination. This thing doesn't like us.
there we are.
There you go.
Okay, we're gonna do a company update here in just a minute, but I want you to indulge me here for just a second, because this will make you money right now.
Not later. Right now.
Right now. Okay, this is one heck of a power of authority because, once again, I picked up 2 clients Sunday in an open house. Neither one of them have homes to sell. I'll get paid within 60 days by using this tool right here. I created this 35 years ago when I was in home building selling for Dura Home Builders, when interest rates literally were 21%. Okay, and so we had to buy down interest rates. So I want to show this to you real quickly. Just a quick example. Let's just say the house is $550. Whoop. And interest rates this weekend were at 6 1/8.
Oh, you got an O instead of a 0 after.
Oh, sorry. Trying to get through this too quickly here.
That picture from when you were at Jura?
No. No,
That
no.
was his male escort days.
Yeah, that's why it's current. It's a current photo. Okay, and I was working with my lender. We were buying the rate down to 4% over the weekend. The points were 6.25. There we go. And look at this. The illustration is just unbelievable. So, cost from the lender was $27.5 to get the monthly investment down from $26.73 to $21.01. The equivalent discount by the builder would have been $94,000. I used this tool 3 times this weekend. One, to get a $30,000 incentive from Lennar Homes, plus $5,000 off the purchase price on a build at McCord Point. And then I used it with a gentleman that is in advertising. He just transferred here from Salt Lake City with the Indy 11. They're using me now to purchase a home from $450 to $550 because I showed them a similar example when I was in my open house. And another young man came in with his parents. His parents had bought the home that they were living in at this point. We're going to assist him again. Showed them this, and they were all talking about, well, builders aren't discounting whatever. No, builders understand this intimately. This protects their margin. So why wouldn't they want to spend $27.5 as an example instead of discounting the house 94 plus? So the power of authority, I haven't had this much power of authority with a prospect in decades. So if you don't understand this, come see Jeff, me. We'll take you through this because this got me 3 deals this weekend alone. Okay, this is enormous to people, and it shows you're far more sophisticated and more differentiated than anybody else you're going to talk to. And the young man had already been working with a broker. He's now using me. The other broker had even shown them houses. So I would strongly urge you to use this, just in indulgence.
Another way, I just used this last Sunday. Well, actually, I did a Zoom meeting on Friday, and the clients were thinking they wanted to be in Carmel, but they thought they were going to kind of negotiate a little bit on the price. So we did a search and found out what was available, but I used this tool a little bit backwards. It's like, okay, the list price is $500,000. You want to offer $485,000. How about we do this? How about we give them what they want at $500,000, but we ask for $10,000 towards a buy down. The payment was lower asking for $10,000 than it would have been offering $480,000. So would you rather offer the seller $480,000 and try to get that accepted, or give them their list price, call the listing agent, blame the interest rate? I've been talking to the listing agent and said, look, your price is good, but these rates are killing us. Would the seller be opposed to helping us with the buy down of maybe $10,000? Pretty much got that offer negotiated verbally before I even sent it in. They're good with that. They're logical. They've got a lower payment. Seller gets their price. Done.
Yeah. Use it on resale. There's no reason you wouldn't use it on resale.
Yeah.
So here's how this works.
Yeah.
There's the monthly saving. That number at that interest rate is that loan amount. Okay? That's how it works.
Does that make sense? So it's a way to get a buyer to offer list price, and it will cost them less to own the home. If they won't do that, let's sit down, get them on Dr. Phil, and have a serious discussion about why they don't like themselves.
Okay. Once again, get with us. You'll get clients right now with this tool. Question?
So whenever you're representing the buyer,
Oh.
or you're talking to the seller,
But that was
the selling
6.12.
agent, and they
That
don't
was-
understand what you're saying,
Pardon me?
when you're the buyer representative,
Yep.
and you're talking to the seller's agent,
Right.
and the seller agent really doesn't understand buy down,
Yeah.
how do you go into that conversation?
I send this to the listing broker. I've literally done this in the past 2 weeks. Send it over to the listing broker, say, hey, here's another way we could make this deal work. My clients are wanting 30,000 off. They feel like the home's overpriced. Let's stay at the list price, but your clients spend 10, and let's get that interest rate down, and the ownership is going to be, it's like my clients are buying a house that's $50,000 less expensive, not 30. So they're going to get what they want. Your sellers retain 20,000 more of their equity. You've got to be able to explain it to the listing broker. And I'll tell you, most brokers don't understand this. It's been too long. I mean, you know, Brian, Chris, we did this all day long. When you were selling new construction, buy downs were, because of interest rates being well into the double digits, in excess of 20%, that's the only way we sold houses. We're using a tool like this. It was always doing buy downs.
We're not that old, we never got 20.
Yeah. In 1982, when my wife and I bought our first home, not 1882, I know some of you think that, but we, interest rates were 21%. They reduced in the time we were negotiating to build a Ryland home down to 18.6. Ryland paid 6 points and got our rate down to 12.5, and that got us the house. And we felt like we died and went to heaven at 12.5% interest on our first home. You had a question?
So on that, that's Ruoff's rate buy down?
Yeah.
And is that pricing?
Pricing changes every second of every day. Points.
So is that spreadsheet up to date with the pricing and the buy down?
No,
Is that
you have to, you always call the lender. I make a phone call, I get the current pricing, they have a system they run, and they tell me, okay, Kyle, that'll cost you 5.75 points. It's a simple phone call. Then I plug that in, the illustration is perfect, and you're off to the races. But I was just amazed at how that locked down 2 clients, just so easy like that. Yes?
Last question, Kyle. Where do you put the verbiage? Like, where is it on the purchase agreement where you put the buy down information?
You can just put it in further conditions.
Oh, no, finance.
Or finance, I'm sorry, you can put it in finance. Yeah.
In the finance.
Seller to pay, yeah.
Purchase price, board and fire, finance, and buy down.
Yeah.
Closing costs, prepaids, whatever. And then at the end, your client can work with their lender and they can use the money any way they want.
Exactly.
Because typically my clients want the lower rate, so they'll even pay out of pocket for some, if they've got the cash, for some of their closing costs so they can get the maximum of that money to buy the interest rate down.
Yeah. So that's not a bad idea. Do you want to pull up, can you pull up a purchase agreement real quick?
Sure.
And we could put like a pre-written clause
Let's see.
together in the agent locker or put it in your template. And then all you have to do is just change the amount.
If I can get.
Copy, paste it.
And Kyle, correct me if I'm wrong, but when it's a conventional loan, a seller can only contribute 3 points, correct?
Only if it's 5% or less. If it's more than 5%, 10% or higher, the seller can contribute 6 points. Now, you've got to understand some of this, and that's why we might, if you want a class, I'll teach a class, but 1 point seller contribution is not based on the loan amount. It's based on the sales price. So let's make the math easy. On a $500,000 house, that seller can contribute 6% or $30,000 toward buying the interest rate down. A point to buy down the interest rate is based on the loan amount.
That's a
Okay.
good point, yeah.
So those are 2 different things. There's a point to buy the interest rate down. The seller contribution limit is, and a point to buy the interest rate down is 1% of the loan amount. So the more your client's putting down, the more leverage they're going to have with the seller, because the seller can pay less money and get the rate even lower because it's a lower loan amount. But the seller can contribute up to 6%. If your client's putting at least 50% down, you can put the seller can contribute 9% of the sale price for seller contribution. Okay, and seller contribution can be anything. It could be the lender, somebody gifting, whatever.
And FHA,
Now,
it's
you want me to get a
is it
purchase
6%
agreement?
at FHA?
Pardon me?
Is it 6% on it?
6% FHA and VA both. HUD, the Department of Housing and Urban Development, both VA and FHA fall under their guidelines. Any HUD loan is 6% always, regardless.
You can get the eyeball, it should show it to you.
There we go. What do you want to see?
Second page.
Okay?
Right here,
Yep.
shall pay all costs of obtaining financing except, and you can paste in there, seller to pay up to, or seller to pay X dollars towards lender approved, buyer prepaids, closing costs, whatever.
Points,
whatever.
any other, the way I state it is just, seller will pay up to $30,000 in buyer points, prepaids, closing costs, and any other lender allowable fees.
Boom, that's everything. If the lender
That's why we've got to get back to the core reasons people move. You know, life events still occur: birth, death, promotion, transfer, job loss, job gain. All of that stuff forces moves. Divorce. You know, I'm dealing with 2 divorces right now, and I've got their listings. But those life events force the move, and that's what we've got to get back focused on. Creating a move is going to be an uphill climb, as Chris is talking about. Another resource in the room is Jeff Kern. I know I kid him all the time and everything else, but I'll tell you, he may or may not know this, but I probe his mindset about the market. I have never been acquainted with somebody that doesn't have a better grasp of retail changes in the real estate market and being attuned to what your next move is. You know, the business buzzword right now is pivot. There's a reason he's our Vice President of Agent Development, because he is a much better visionary, and I'm real here. He's a much better visionary than I am about seeing market shifts in the near term and the long term. And if I'd have gotten with him quicker, I had a record year, high year 2 years ago. I had a record low year, worst year I had in 7 years in transaction count, and I'm not going to let that happen to myself again. If I'd have gotten with Jeff sooner, and part of his coaching now has even taken me to where I'm having a phenomenal January, and it's due to his assistance and his telling me things like, you know, you're preaching to the wrong audience. You got the right message, but we need to shift your audience, and here's a couple of strategic things I would do, and I'm doing them, and it's paid dividends immediately. So he's an asset, and I would strongly urge you to use him.
people are,
We're going to get into some of the BLC Connect stuff now. If you've got things you have to do, we understand. We're running over today, but if you'd like to stay, we'll stay as long as you want. The next thing we thought we'd do, just so we're all kind of on the same page, is show you our default searches. You can set up as many searches as you want in the system. So if you haven't customized your search and you want to get on your machine, if it's here, it takes 5 minutes. We'll do this real quickly, and then it's going to pull the data almost identically to the way you were pulling it in Matrix. So we're going to go here. We're going to log into MyBor Central.
do it as keeps, let's get ready to log in.
All right, so here's the connectBLC homepage. We're going to click on Connect. Okay, here we go. Just one quick tip from Nav. You don't have to wait for the drop down. You just click on the magnifying glass, click on it, and that immediately, and Jeff just stated his words, that immediately takes you to your default search, okay? Now, watch my cursor. We're going to come down here and click on Add Remove Fields. Now, what I want you to first do is delete everything that has an X on it. Delete them all. So I'll give you a minute or two to do that. Everything in this column you're going to delete. And then we're just going to start from scratch and add back. Pardon me?
Yeah, wait for them to, yeah, because.
You're going too fast.
Okay.
I was just saying, let them catch up. Too fast.
Does anyone need me to repeat the steps I just did? Okay. So, once again, I'm going back to
Do it like you're getting.
My BLC, and then you do not have to wait for the drop down. Just click on the magnifying glass right here. Don't, just click on the glass, that's what I'm saying. That automatically defaults you to your general search. Yours is going to look different than mine because I've already customized mine. Now, who isn't at this page? Raise your hand if you're not yet. Okay. Okay.
You want me to walk around
Yeah.
and assist?
Yeah. That'd be a good idea. Jeff will be walking around to assist.
I'll be walking around taking drink orders for later. No.
The magnifying glass is up here. Just click on it. You do not have to go down into that drop down. So don't waste the time.
Just raise your hand if he gets ahead of you.
Yeah, if I'm going too quickly, just somebody raise your hand and I'll slow down. It's hard for a 200 plus IQ to do that, but I'll do my best. All right. All right, we're going to the next step. Down here, follow my cursor. I'm going down to the bottom of the screen and I'm going to click on Add Remove Fields. This pop-up comes up. I want you to delete everything with an X on the right side. Just delete them all because then we can start fresh. Jeff?
One at a time.
Raise your hand if you need assistance. Jeff will come right to you.
I'll bring both of these.
He might cough some food on you, but
Anybody want a bagel?
okay. Are we ready?
Yes, status won't go away.
Status won't go away. It doesn't have an X on it. Okay, now here's the filter bar right here. I want you to just click in it and start typing the word listings, and when listing ID comes up, hit the plus sign. It's going to pop over to the right. Got it? Next, start typing for sale or lease. As soon as it pops up, hit the plus sign. It's going to go right over to the right. Next is status. Next, start type. Hold on. Yeah, status is already on there.
So move status down.
No, it stays there. Okay, next, start typing close date. Hit the plus button. It's going to come above status. You're going to pull it down by getting the cross with the arrows and just pull it below status.
Would you say close date?
Close date. So right now we have 4 items. We have listing ID, for sale or lease, status, and close date. Next is type, T-Y-P-E. As in, I'll use sentences to explain these words, as in Jeff has no type. Next is type by itself. Type by itself. Sometimes you may have to scroll all the way to the bottom of the list on the left to find where it is. Okay, ready? Next is address. It goes below type. Just address. Next is price.
What's next?
Price. Next is bedrooms total. Somebody said bedrooms full, we're not. Next is bathrooms full. Bathrooms full. And you can look up here if you're a little bit behind. Next is bathrooms half.
Which yesterday was known as bedrooms half.
Yeah. Next is school district. School district. Next is subdivision name. Subdivision name. Next is fireplaces total. Fireplaces total. Next is levels. Next is garage space Y/N.
I just have garage.
If you scroll down, you'll find garage space Y/N.
Nope, I don't see that either. I see garages, no garage.
I had it too.
It's just yes or no.
Garage. I have-
Garage, yes or no?
I just have garage, that's it.
That's what it is.
That's it. Garage space Y/N. Next is garage spaces. Next is the abbreviation SQ space FT space MU. Square foot main upper, but it's abbreviated SQ. Look at you can look at the screen anytime. I'm moving my cursor. SQ space FT space MU. Next is basement space Y/N. Basement Y/N. Next is building area total. That is the new terminology for total square footage. So building area total, which means it includes a basement if there is one, but does not include the garage. Next, lot size acres, or as Jeff pronounces it, acres, lot size acres. Next is days on market. Days on market. Next is price per square foot. And lastly, year built. Now, everybody look up at the screen. We've got 3 more steps to do to make this your default. I want you to click on Save Changes.
Hold on a second. Go back.
So once again,
Yeah, make sure everybody's on this.
see where I am here? Once you've got them all in, you're going to click on Save Changes right where that cursor is. Click on it.
Go to add.
Right down here, Add Remove Fields.
But
You
go
should
back
still
down
be
in
able
there,
to.
Make sure everybody has.
Okay, let's go through them one time.
Yeah.
First is scroll all the way up to the top. It's okay. We're going to start now. Listing ID. Second is for sale or lease. Third is status. Next is close date. Type. Address. Price. Bedrooms total. Bedrooms full. Bathrooms full. Bathrooms half. School district. Subdivision name. Fireplaces total. Levels. Garage yes or no. Garage spaces. Square foot main upper. Basement yes or no. Building area total. Lot size acres. Days on market. Price per square foot. Year built. Now, I want you to go up here and see where my cursor's moving. I want you to click on Save Changes. Keep watching. Come over here to Defaults. I want you to click on Defaults over to the upper right.
They're loading. It takes a while for the saves.
Okay? Yeah. Steve Jobs is taking a dirt nap. You don't need to own Apple anymore. He's okay. Jobs. I'm sorry, Jobs.
Kyle,
Yeah.
after you click defaults, then what?
Click on defaults. You're going to see this, the bottom one. Click on Save Current as my default. This window pops up. You're going to click in the box. Make this my primary default search.
Is everybody on this window?
Yes.
Perfect.
Click on Make this my primary default search, then click OK. That is now your default search.
Single family,
Couple.
what's the single family? I was trying to do.
Residential.
You can do it, yeah, type is where you can do whatever you want. You can put in condo, single family, whatever, and type.
I just have basic.
See, look up here at the screen, type. I can come in here, put different type of thing. Oh,
Residential.
we're going to make a change. Yeah, V, thank you. All right, everybody, we're going to have to do this one more time. We're going to make a change here. Everybody, let's come back together. Hold on. I want you to go back to Add Remove Fields. Okay, we're going to delete type. I want you to hit the X, delete type. It's the fifth one down. And now we're going to add back property subtype. So we're going to add property subtype, and we're going to bring it up to the fifth spot. So it's down at the bottom. Look at the screen. You're going to get the cross with the arrows, and you're going to just start pulling it up. Property subtype, and I got it all the way up, and it's 1, 2, 3, 4, 5. It's below close date. Below close date, and that will now allow you to select either single family or condo. Thank you, V. So we're going to repeat it. Click Save Changes. You're going to go back over to Defaults. Click on Defaults. Click on Save Current as my default, the bottom one. Then you're going to click in the box, make this my primary default search. Then you're going to click OK. Okay. Now, I'm going to ask Mr. Kugelhahn to come up here because he showed me something really cool yesterday on how to customize your display.
Well, here, real quick, Kyle, can you go into Show Map? Because there have been
What, map or what?
5 questions about map.
Show map
Go
where?
into map.
Show map. Okay, here's show map.
So real quick, there have been a lot of questions about this. Can you hit those 2 arrows that open up up at the top? If you hit those 2 blue arrows up
Blue
at the top.
arrows.
That's the one where you want to
Oh,
search. But
you
up
click
here-
search while moving map.
Yeah, but up here on the top, if you can hit those 2 to expand that bar. on the
Okay,
top.
show list is what it's called, Jeff.
No, not show list. Below that, where all the different options, right there.
I don't
Here, hold on.
I don't see any options. Where?
Up here, open this.
Oh, okay. Here we go.
So-
Look up here. I'm hitting the double arrows in this search bar right here.
Right here, when you open this up, so there have been a lot of questions about different things. This is a little different. If you click this,
Click
the
what?
stacked rectangle, the stacked squares, you click that, that opens up all the different layers that you can use for your search. So if you want to do high schools or floodplain or different school districts, if you check that box, then it'll show you the school districts, it'll show you if it's in a floodplain, all these different things.
Okay, where are the school districts?
Well,
You
you have
still
to
have to
put-
hit the map?
Yeah, you have to hit the map, but if you center it on a certain property, then this is going to show you all the different layers in that property.
Click school districts.
Okay.
Does that make sense? So somebody wanted to know, can you search if it's in a flood zone? Yes. Or
Okay.
can you search by a certain elementary school? Yes.
What's your rental address?
17075 Newberry Lane. That should be enough.
Yeah, there it is.
Well, that's a listing. That's not in the.
Okay. What?
You want to click on this one? just click on the top listing, go in that way.
Yeah, but I wanted to show something. I had a question the other day that I need a history of all the listings on a property. They come up right here. You can see there are 4 listings on this property. 1, 2, 3, 4.
Yeah, if you click inside the listing, you can also get them inside the listing.
And show us where, Jeff. Where's the history?
Right up here where it says additional info,
There.
there's listing and property history.
Listing and property history, and here you go.
So that should pull them out.
There they are. There's all 4 of those listings right there. Okay. Okay, Tyson? Can you speak louder? I'm sorry.
Figured out a way to copy link multiple listings on it so that you can paste to an email and send to your clients versus direct email through the system. Like we used to be able to select all these comps and copy a link. I've only figured out how to do it as an individual listing.
Okay. Not
You
sure.
want to send multiple listings? You can't do that out of the agent single list. Let's do a quick search.
No, hold on just a minute. I want to, Chris?
You have to select the detail in order to.
Chris, you want to show us here real quick on how to, okay, so here's a way to change, everybody listen up here. Here's a way for you to change the display. You can come in here, Chris showed me this yesterday, and Corey and I did it so that we could continue the same format as sending you the builder specs weekly. And so you can come in here and hit modify columns, and you can change to whatever you want. So, and you can save that display, okay, and apply it to anything you want. So you can change, you can X out of everything, you can do the same thing we did on a search, but it's going to change, your search is still the same as the overlay, but how it comes up to display is different.
Yeah, so if you,
I'm sorry, we got a question back here.
But you can't save, like I have that, like my order, my columns saved like waters, but I have to click that each time.
You do, yeah, and that to me is a glitch.
You can't make it a default.
Yeah, no, you have to go in and you'll see that saved display, and you'll have to click on it. So you can have a bunch of them in there, you can call, and you can display them all differently. You can have one, like Corey and I displayed at Builder Specs. We use that display for both actives that we send you and pendings, and we click on it separately. So that's another thing you can do in here.
As you
Also,
play around with this, it is a functional system, we just don't understand.
is Randy here this morning?
But it is a functional system.
Randy? Okay. Randy Wasmuth showed us yesterday in the BLC how to change the default messaging. So when you're first sending out a new search to someone and all that, so that is available too. You can change all the defaults. You go up here, click on your photo. You click on settings. And when settings come up, you click on, let's see where that is. Email template defaults. And any of these can be changed and renamed. And I would strongly urge you to do this. So we can come in here and we can just click on that. Hold on.
You have to click that link up there first. Click here to create, modify.
Click here
Where?
to create or modify your
Create or
email.
modify.
Second paragraph. bottom
Okay, yeah.
paragraph.
Right there first.
There. Okay. And here it came up. System default for notification template. So this says, dear client first name. State your name. No. I found, and this gives you the search, the count, and the properties. I don't want to do that. I don't want to send them all their search criteria every time. So that right there to me is kind of not a good thing. That match your criteria, your requirements. I'm sorry, it's search criteria below it. Let me know if you have any questions, comments, or updates to our requirements. The subject line is going to be Kyle Gillette has sent blank properties for their name, for Jeff to review, that's very cold. That to me is not, yeah. So I would strongly urge you to modify these to make them sound like you, okay? And what are the default when it says client? Those are lookups. Those are lookups is what they are. What's that? Yeah, everybody's having subcon. Sure. Somebody wanted to see how we do a comp. So I'm just going to do a basic comp here. I'm going to go get out of there. I'm coming back to the BLC.
I have an example you want to use.
Well, there's lots of.
Just for speed, not right now, but we can do it later. So I'm just going to come in. Once again, don't make work for yourself. Just click on the magnifying glass. Here's the criteria. So I'm going to comp a listing. So I'm going to have active. I'm going to click pending. I'm going to click sold. And I'm going to go 0 back 180 days. Okay? And then that's recorded. You see it right here. Active, pending, sold. Close date between 0 and 180 days. I'm looking for single family residential. I'm going to put the subdivision as Deer Path. So I'm going to put in Deer Path. Whoop. Not the enclave at Deer Path, sorry.
You're already
Just,
moving too fast.
okay, I'm going to wait here for a second.
Go back to the first page.
Oh, God.
Go back, just hit the magnifying, go back.
Okay, we're going to start over once again. Shit. Okay, we're going to start over. Let's come here. So here's a way to comp property. Is everybody here? This is just our standard new default search. First thing, we want the status. We want active. If I'm comping, I'm going to click penned. And I'm going to click sold, and I'm going to put a date range of 0 to 180. That's what an appraiser is going to try to do. Just click X. That's in there now. See, it's right there. I'm already in single family residential. In bedrooms total, I'm going to put 3. The subject property is a ranch with 3. Bathrooms full, I'm putting 2. It has 2 baths. 2 baths, 2 full baths. 3. In the school district, I'm going to put in Hamilton Southeastern. Okay. Now let's review here. Right now I'm showing 1,046 matches. Is that what everybody's showing?
I have 1110.
Okay. Let's go back through. It already defaulted residential for sale. Status, I have active, pending, sold, close date between 0 and 180 days. Single family residential, I have 3 bedrooms total, 2 full bathrooms in Hamilton Southeastern Schools. Okay. Now I'm going to put in the subdivision, which is Deer Path. So I'm typing in Deer Path. As soon as it comes up, I'm clicking on it. Clicking out. Now I have 26 matches. Is that what everybody has? Okay. Now we're going to put in levels. We're going to put in 1 level. I have 10 matches. We're going to put in garage, yes. And we're going to put in garage spaces, 2. 2. All right. Now let's let it cycle. I still have 10 matches. Let's say this property, the square footage main upper was 1,400. I'm going to search around it, 100 down and 100 up. So I'm going to put in square footage main upper, 1,300 in the first. Hold on. 1,300. And I'm going to put max 1,500.
You have 0?
That took me to 3 matches. Has everybody got 3?
Somebody's got 0.
0. Okay, let's go through it again. Property type residential. Look at the screen up here. For sale. Status says right here, active, pended, sold, close date between 0 and 180 days ago. Property subtype, single family residential. Bedrooms total 3. Bathrooms full 2. Now, one other thing, you can still use plus signs, just so you know. Or you can use the max. I think you can use plus signs. School district is Hamilton Southeastern Schools. The subdivision name is Deer Path. Levels, 1 level. Garage, yes. Garage spaces, 2. Square footage main and upper, 1,300. The second box, 1,500. I've got my 3 matches. Is everybody now at 3? Okay. Now we're going to go to view results. Here's my comps. So how do I do my quick CMA? I click in this box up here, highlights all 3, and I'm going to click on this icon right here with the arrow going upwards. The single arrow. That's the new quick CMA. And here's my CMA. I'm going to expand it. And one of them was active. Here are the 2 solds. You've got your medium, average, sold. You now have your sold price per square foot. The median is exactly $200, which is accurate. That used to be inaccurate. That's been repaired in the last 3 days. Okay? So Friday it was corrected. So that's your new CMA, and that's how it looks.
Did you have to put in a description?
No.
So how do you send all 3 of those listings to your client except through the database, through the email? You should be able to copy a link with all the listings, right?
Yeah, you can.
Check all 3. Check
Yeah,
all
but
3 and then go to,
Now, no, let's go back. We're going to close this. No, they're closed. They're here.
no, go back in there.
No, hold on. Here's how you do it. You just click on, if you want the full thing, all of them are checked, and you want to email them, there's your email. Email them right there.
I want to send my own email with the link.
Right.
Oh, your own email
See
with
the
a
little
link.
Download button right below, beside the Broker Bay logo.
Right there.
Hit that download, export.
All selected listings. Next.
So what are the
We don't
options
want
there?
one-line summary. We want, oh, no,
What's the builder specs to?
I don't know.
You see where it says reports? Oh, we gotta go back.
So you can't download it? You used to be able to download the list.
Kyle, what about in additional?
You can't.
Hold on just a minute.
Gives you like an Excel spreadsheet or
V, what do you, go
See
ahead.
where it says reports at the top?
Reports, yes.
Top of reports. And then it says
Add
add new CMA report.
new CMA, what?
send a link individually for each individual.
Wait, let me go back.
Go into the CMA.
Yeah, we're
We're actually getting the
okay.
10 minutes.
Yeah, we've got to get going. If you need assistance, just come in any day from 9 to noon or call Jeff and I. Question? I'm sorry, I can't hear you. Hold
We'll
on.
be together.
There's so much going